Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is the 6th of February. My name is Russell Shaw, and I'm a senior market specialist at FXCM. And what I'd like to do, just go through our disclaimers before we get on to the live stream. And we'll start off with the high risk investment warning. I'll keep this on screen for a few moments. If you can just please take a read through that. Just another few seconds, and then I'll bring up our market commentaries disclaimer. Beg your pardon. Okay, here's our market commentaries disclaimer. Again, if you can just have a read through that, I'll leave that on screen for a few moments. Okay, excellent. And let's start off with our analysis of the real rate. So let's bring that chart up. Okay, so this is the real rate. Effectively, what we're looking at is the nominal rate minus the break-even rate, gives us the real rate. It's been moving up quite furiously over Friday and again yesterday. Hey, Kim, good morning to you and welcome. And we're looking at the daily chart here. There does seem to be a red candlestick. What I want to keep an eye on here specifically is this resistance level over here. Okay, we've got this resistance level right there. And effectively, how much higher can yields go? And I don't think, subject to correction, I don't think they can go much higher. Why don't I think they can go much higher? Is because I think we're in an environment where rates are going to be coming down. Yes, rates have been pushed back from March. So we're not going to get a cut in March, but we should get a cut in May. And I think that's going to be discounted into our fixed income market. And whilst the jobs data was really incredibly strong on Friday, perhaps it's an outlier. It just doesn't seem to be on track with the other macroeconomic data that's coming through. Although the services PMI that came through yesterday was strong as well, but again, not out of whack like the jobs data was. So I do think we're getting pretty close to the apex of where yields should be at the moment, with potentially a movement to the downside. Now, this remains to be seen. Okay, what we are talking about here is very much conjecture. But the idea is, if we're going to get a movement down here in rates, it's going to flow on to other financial instruments. Again, I think we're pretty much at the apex. Why? We're in an environment where rates should be coming down. We're not tightening. We are in fact looking to loosen. All right, let's just fix up this resistance. I'm just going to make it as such. All right, let's take a look at the weekly chart just to get a bead on a longer term chart of the real rate. So I'm just going to change this through to weekly. All right. Okay, it's interesting. So what we just want to watch here is whether we get a break above the 50 on that RSI. Again, I would suggest if there is a movement towards 50, it's more likely going to be some sort of oscillation as we move sideways and we go towards that rate decline. Let's just keep an eye on that resistance level here. And what we can do is add the green back to this analysis just to see how the greenback has been affected given the last two trading days where we've seen the real rate really elevate. Okay. Hey, Raj, good morning to you and welcome. Let's go put the US dollar underneath this. All right. So just click plus US dollar. And US dollar is a good place to start for two reasons. I think number one, it is a safe haven. So if there is demand for the dollar, that means generally that there is demand for safe haven flows. Certainly, if the dollar is moving up, it's likely going to put pressure on the other major currencies, isn't it? So, the dollar has been strong. Dollar has been strong. I don't think that there's any ambiguity about that. Dollar has been strong, and especially I think with the last two trading days, some flow has found its way into the US dollar. But okay, and what we're going to do is we're going to add in an indicator here called the correlation coefficient. Just to see how the US dollar is related to the real rate. And then we're going to have something to say about indicators. Bring in the correlation coefficient, which we've done many times before, but I think it's worth just revisiting here. So let's bring in the correlation coefficient. And just make sure that we're looking at the real rate to the US dollar. Okay. So let's make sure that's in. And generally, we've got a very strong correlation here. It's tending towards 1. In this case, 1 is effectively 100%. And what that means is they move in alignment with one another. As the real rate moves, the US dollar is going to follow it. Okay. So if there is going to be some sort of decline here, and I just want to say that it's very much conjecture, just bear that in mind. We've hit a resistance area. I think we're at the apex, subject to correction. I think we're at the apex of the real rate because we're going into a loosening environment. If the correlation stays as tight as it is, I think it should bring the US dollar down. It should. So, in other words, this movement up here in the US dollar, effectively, dare I say, a dead cat bounce. Okay, let's take a look at the US dollar on a top-down type of analysis. We'll go through to the US dollar weekly. Take more of a sort of a microscopic analysis of this. So let's just go through to the weekly. All right, let me bring that in. So, all right, so if this is a dead cat bounce, this is going to be like this would be sort of a wedge. I'm not sure it is a wedge, but if this is a dead cat bounce, effectively there's sort of a wedge there, and then there would be a breakdown. Again, that remains to be seen. The evidence of that is not quite obvious yet. In fact, we've got the US dollar above that 30-week exponential moving average. But the 30-week, I mean more compression in euro US dollar. I'm not certain. We'll take a look at euro US dollar next. I'm not sure what you mean by compression. Compression as in sort of like a tightness, a volatility, a squeeze maybe. We'll take a look at euro US dollar next. The idea is we're above that 30-week exponential moving average. But remember, that 30-week exponential moving average we actually use as a directional filter. In other words, if it turns up, that would be bullish for the US dollar, right? But it's sort of flat at the moment. Perhaps a little bit of a slant coming in. I'm going to call it flat for now. But no doubt the RSI above 50. No doubt the RSI above 50. So bullishness. Now, let's just go down to the daily chart and see what that has to say. Now, we are in zone one. Zone one is between the upper red and the upper blue. So if we're in the upper red, upper blue, that's our bullish area. So no doubt about it, US dollar is in the bullish area. We've hit this resistance, and now we want to see if the US dollar holds or surpasses that resistance. We are getting pretty close to an overbought, but we're not quite there yet. The fact of the matter is, all right, if we were looking at this as traders, the daily chart, no doubt, is in zone one. No doubt is in zone one. And if it's in zone one, potentially, okay, this red candle that we're getting today is a dip in the uptrend. If it is a dip in the uptrend, we would need to see some sort of cooperation from the hourly chart. Okay, so I'm just sharing the hourly chart with you. This is the US dollar again. If there is going to be a dip in the uptrend, then we need to see the EMAs move bullishly. Just want to take out all this color. All right, so we need to see the green pop above the orange EMA if there is a dip in the uptrend. If there's no dip in the uptrend, then the green remains below the orange, and we should see a movement in the lower quintile here. So this is going to be quite important in determining what kind of day we have. Are we going to have a sort of a risk-on day where the majors move up, dollar moves down, and the stock markets move up? Keep an eye on the hourly chart. If it's going to cooperate with the daily envelopes, okay, if it's going to cooperate and we're going to see a dip in the uptrend because we're in zone one, then we're going to have to see the green pop above the orange EMA, and we're going to have to see the stochastic start moving up. Okay, if we get the stochastic moving up and we get the bullish crossover here, it's a dip in the uptrend, and we're going to see the other majors come down. If it holds trajectory here, okay, and we stay in that lower quintile, okay, then what I suspect is we'll get the other majors moving up. So we've got a comment here, compression in euro US dollar. Well, let's take a look at euro US dollar. Let's see what's happening on euro US dollar. Again, top down analysis. So let's just go through to the weekly chart of euro US dollar. All right. This is euro US dollar, and it's a mirror image of the US dollar basket. What we've got is we've got euro US dollar below its 30-week exponential moving average, and perhaps a 30-week exponential moving average tending towards down. So we've got to be very careful, because that exponential moving average, that's the directional filter. But we do have this RSI below 50. So it does seem that there is some bearish energy there, just as there's some bullish energy on the US dollar. Let's just take a look at the daily chart, euro US dollar, and we'll take a look at it in terms of our zones. So let's bring that up. And you can see that the euro here is in zone 3, isn't it? It's in the zone between the lower blue and the lower red, which is our bearish area. So there is a negative bias there. It's sort of trending softer, and you've got the RSI pointing down. There is some blue. So if we're traders, is this a dip? Is this a dip in the downtrend? Well, to answer that question, we've got to go through to our hourly chart. So let's just bring up the Euro US dollar hourly chart and see if there are any signals that we could reach or any conclusions we could come to there. All right, so if it's going to correspond, if it's going to cooperate with the daily chart, we would expect a movement to the downside here. So if there is a bearish cross in the EMAs, then there would be a bullish cross on the dollar side for the EMAs. And if we get the stochastic starting to come down towards that lower quintile, then the euro is starting to push down. So watch this very carefully. We're kind of at the crossroads. Which way are we going to go, left or right? And if we get the bearish crossover on the EMAs and we get the bearish crossover on the stochastic, then we're getting a stronger dollar, euro US dollar coming down. But if euro US dollar coming down, well, money potentially going into the safe haven of the dollar, that seems to be a headwind for risk markets, which we're going to take a look at next. However, if we hang out in the upper quintile over here, if we hang out in the upper quintile 80 or above, the momentum is going to be pushing to the upside. So that's why we're at this crossroads, right? So just keep an eye on that. I hope that sort of helps Cajun Exchange. I hope that helps in terms of your comment. Let's just take a look at the DAX, see what's happening on the DAX. So we look at the European side of the risk market. So a top-down analysis. Again, let's go to our DAX instrument. Okay, so this is the weekly chart. This is a weekly chart. Last week we had uncertainty. We had this what we call a doji star. There is underlying bullishness on the longer term chart of the DAX. It's above its 30-week exponential moving average, and the 30-week exponential moving average is moving up. It's pointing up. Okay, and we've got the RSI break to the upside. A little bit of blue coming in on the weekly chart. Let's take a look at the daily now. Okay. So where's this positioned? It's positioned in zone 1. That's a bullish area. Okay. Bollingers are expanding out, so potentially some sort of expansion in volatility there, and some blue. Okay, so it looks as we head towards the cash open, which is going to be in just under 2 minutes. It looks as if there is bullish positioning ahead of the cash open on the DAX. What's the hourly chart telling us here? So let's go through to the hourly chart. All right, and let's bring that chart up. It's actually a very strong start. It's a very strong start to the early positioning. So we've got less than a minute now. The cash market's going to open. We've got some divergence in the exponential moving averages. They're moving away from one another. That's an expansion in trend. What about the stochastic? Stochastic moving towards that upper quintile. If it hits that upper quintile and holds, then there is going to be a movement, a swing in the DAX. So it's looking quite positive. What would be, I think, a real good evolution of technical signals or catalyst is if we do get a pullback in the US dollar, if we do get a lift up in euro, then I think that feeds directly into the risk market, should get a movement up in DAX as well. Raj just asking if we can take a look at NASDAQ, and we certainly can. So let's just take a look at NASDAQ and see what we can glean. All right, so bringing up the NAS 100. And I'm going to go ahead and share that chart now, Raj. And I think it's a terrific looking chart. Okay, I think it's above that 30-week exponential moving average, and the 30-week exponential moving average is moving really nicely up in a northeasterly direction. What about the underlying momentum? Well, the RSI is just absolutely perfect here, right? It's above 50, which is on the bullish side of the oscillator. Let's take a look at this on a daily time frame. Raj, just going through to our zones now. And you can see it's sitting really nicely in zone 1. Really nicely in zone 1 with a good looking RSI. And let's just go through to the hourly chart, and we'll end off here with this chart. And what we'll do is just see where it's positioned in terms of the are in bullish mode. Good angle, good separation there. And you can see that the stochastic is in that upper quintile. And as long as we hold, I'm just trying to grab, there, that's better. And as long as it stays in this upper quintile, there's going to be a really good momentum push there. So, and the results have been mixed, right? So we've seen Amazon and Meta have extremely good results. Actually, Microsoft's were as well. Apple beat, but Apple's having trouble in China. Microsoft, the market didn't like, I think, some of the forward guidance there. But by and large, maybe a little bit of a mixed bag. We're going to stop here. If there's any questions, go ahead, type those in. If you found this useful, if I may request you to just go ahead and click on that boost button, that rocket ship, which helps us disseminate the live stream. And I really hope that you guys found this useful. I wish you a very good day ahead, a good evening, and we shall do this all again tomorrow morning. Thank you very much, guys. See you tomorrow.